So y'all thought we were pulling your arm that this AI trade, chip trade was over. Wrong. ARM getting up to nearly $109. That's our top report. We're going to talk about that. Don't look now, but the house of mouse is in triple digits. Will it be able to stay there? Rough report for PayPal. Jobless claims at 8:30. Christian Fromhertz joins us at 8:35 with something new to offer you guys. It's a Thursday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Starting out a little bit in the red here, down 8 3/4 handles at 50060. Old-time closing high yesterday. We'll keep an eye on that. That's 5015.25. Buck still strong, up 27 cents here at 104.19, off the highs of the move. Bonds down 3/4 of a point, finding support here at 120. Crude up a $1.06, 74.93. Gold in the red, 1330. That's at 2038.40 cents. Silver in the red by only 4 pennies here, 22.32. And Bitcoin, that's got a 45 handle on it, $45,000.25 at $615. Let's bring in Triple D. Triple D, I mean, there's the AI trade. I mean, holy mackerel. Whatever is going to put an end to this AI run?
I don't know. Bring in AB here too. Maybe he can figure it out here. We're going to bring AB in as well. AB, we're trying to come up for a title for the show, and I'm like, this is a good one because this may have been the most obvious trade ever. We talked about ARM. You know, we talked about owning it ahead of the report. That would have worked as well because it went from 73 to 77 ahead of the report. We didn't talk about holding it through the report. I thought about buying it ahead of the report, like buying it and holding it through the report, just because I was like analyzing. I'm like, you know what? I did it with Palantir and it worked well. And I'm like, is ARM going to come out and actually miss here? Are they coming out and lowering guidance, you know, when Nvidia is tied in and AI is hot? Probably not. And this is also the market that prices in nothing. So, I mean, wow, though, I did not expect this move. This is an incredible move. And last night was even more incredible here. They're just so hot for anything to do with AI.
And so, I mean, I'll go through some of the numbers with ARM real quick. So the EPS came in at 28 to 32 cents versus 21 cent estimates. Revenue came in at 850 million. Or sorry, actually, this is for, okay, yeah, so 850 million versus 780 million estimates. The guidance was also super strong looking at the full year for 2024. We had the revenue guidance for 2024 coming in at 3.15 billion against 3.05 billion. You know what my sign for ARM being like, you know, a strong player in this space was, and this came, you know, a while ago before the report?
What?
When Nvidia wanted the technology there, right? Because we've talked about how Nvidia is the leader in the space here. And I mean, Nvidia tried to acquire ARM.
Yeah, they did.
Back in the day, a couple years ago. And then recently, you know, more Nvidia was using some of ARM's technology. And so, I mean, if you have the leader in the space basically saying like, hey, we want this company, that should be a sign that ARM's making some pretty good products.
Yeah, this was just, again, one of the most obvious trades. And I took the Palantir trade. It seemed pretty obvious. It just felt like, and it even felt like, because people are short this and they're talking about valuation. They're talking, you know, there's so many, you know, issues and with, you know, trying to make a valuation call on a story that is hot. We've talked about this on the show in the past. Valuation doesn't matter at all when the story is hot. And this AI story has been so hot, yet there sits ARM just consolidating, just quiet, nobody talking about it. And again, is it a pure play? Is it not a pure play? Obviously, well, I don't think it's a pure play at all, but they've classified, they've talked about it before as an AI play. So, I mean, it's just been sitting there while SMCI goes, while Nvidia goes, while Palantir blasts off. It's just been sitting there quietly. No. And then the earnings come here and everybody remembers, oh, wait a second, ARM is an AI play as well. So I just, I'm so mad at myself right now, even though I've made some pretty good calls lately. And, I actually did call this a little bit ahead of it, but, I'm mad that I didn't, buy some of this into the report.
Do you guys know what ARM stands for?
That's good. In the company, or are you just a joke?
What the R?
No idea.
Yeah, I bet you our smart chat does. Does anybody in the chat know? Let me go to the chat first, and then know it. Here. This is. I gotta go. It is called Acorn Risk Machine.
What?
I'm looking at Benzinga.
What the hell is an acorn? Like
which is used in 99% of the world's smartphone CPU cores, and it also has high market share in other battery-powered devices like wearables, tablets, or sensors. That's what it's called.
I did not know that. Well, we learn something new. A new fact we learn from Joel Elconin every single day. Fun facts. I would have thought it was like this company's from, Michigan somewhere or something like that. Obviously, it's not.
No.
But it's a smartphone company. It is, but right now it's not. They talked about this as an AI play. I mean, this is, getting the AI pop.
Well, hold on, Joel, real quick, because I'm seeing on the Wikipedia page for ARM Holdings that the company changed the acronym from Acorn Risk Machines to Advanced Risk Machines.
Oh, they don't like the Acorn name.
But Risk isn't RISK, it's RISC, which is another acronym. So do we know what that acronym stands for?
Zippity doo-dah, zippity yay. Showing right there.
Rapid increase of selling chips.
No, but that's not a bad guess. It's reduced instruction set computer. Oh, so okay, someone threw the risk.
He already
got. Oh, there. See now, Dennis is able to put the comments.
I got the power this morning. They let me into the back seat of the producer role here, so I can show anything. I could just show my screen. I could show Joel. I could get rid of Joel. I don't like Joel right now. He's gone. No, he's back. No, he's gone. Now he's back. I got the power here. We all have the power, actually.
Yeah, we do too, Dennis.
Yeah, so I know.
Just easy on that.
But I can show all these great messages we're getting here too. Like, John Lewis, he always gives us some love.
He always gives us a hard time. He
giving us love here this morning.
It goes Jay, and then it goes John Lewis. I think giving us a hard time. I don't know who. I don't even think there's a close third in there.
Look at this. I could be the quad D because I'm dictating the show here now. Look at this.
Yeah, dictator Dennis.
I didn't mean to show that one.
I was telling. So I was telling Dennis before we started the show that I was actually looking at calls on ARM yesterday because I was looking at what companies were reporting, and I was like, oh, these are way too expensive. The only ones I could afford were the $100 ones, and I was like, that's not going up that much, and they were 22 cents. So
they were 22 cents.
I didn't buy them, but I'm almost in a way glad I didn't because I'd be kind of upset right now that it got all the way up to 108 and is now trading lower. I mean,
so you know what? I'm going to tell you, and we haven't had this for a while. So you know what you do when you're long the calls. Joel knows what you do. If you're looking at this thing and you can't trade out of the calls because the options market is closed, you know what you do? You want to lock in that profit at 108, AB? You know what you do?
I mean,
last night?
I don't know. I don't know if I could start shorting the stock.
You short the stock.
Okay.
And I mean, maybe the borrow's a little bit, but I think the borrow's there. So yeah, the borrow's there. So that's what you do. You go in and you short the stock at 108, and then you just locked in $8. And then you know what you're doing right now? You're like, oh, well, it's back under 100. So I can just cover it at 98.5, and I'll just make myself $9.50. And now my call's open again. And then it goes back up to 105. You short the stock, comes back in, you make money. I've traded options like that and traded the stock around the options a lot of times. That's what the options are really used for.
Yeah,
that's the purpose of it. to control your stock positions. So that's how, folks, that's teaching you how you lock in the profits. You got the 100 calls, short the 108 last night, you locked in $8. And then it comes back in right now. You might as well cover at 98.40. And now your calls are alive again. They're not locked in. So you made yourself almost $2 if you short in the 108 handle, $10. And then, so that's the strategy that you do if you're trading after hours and you're like, oh, I can't sell my calls. I wish I could sell my calls. Short stock.
But you have to have the right account. You got to have the right buying power. You got to have the big enough account to be able to do that, because
you got to have the brokerage that allows you to short that stock.
Yep.
Because ARM, I can borrow it right now, but ARM is maybe not available to to whoever. And again, if you're at Robinhood, they don't allow you to short in stocks. This is an option for you. So I mean, if you're going to be a stock trader that actually is going to be active and trading after hours and doing this kind of stuff, you maybe need to get a solid broker that you can do these kind of strategies at.
108.89 is your after hours high. Don't know if you're going to be able to get back over there. So I'll give you an intermediate number. And this is just an intermediate, just over triple digits. The last two brackets, 10063, 10060. So that's where someone has stepped up. If you're trying to peel out of something, also like the 100 calls, someone that like maybe trying to lock something in there as well. So keep an eye on that. Besides that, where to buy this thing on the dip, I think you'll have to go to your 1 minute and 30-second exponential moving average times 8 to figure out where to buy this thing on a dip.
I have no idea where this thing is going now, because it really came off last night from 108 down to like $93, and then they've started buying it back up here. But it feels like that 108 could be safe. And again, remember this company, it's cell phones in parts. It's, again, it's, obviously an AI player as well. But this isn't like Nvidia. That's, more of a pure play. So I don't know. I think it's had the AI pop. I don't think it's going to just blast off and pull it. Some people are saying it's going to be the next SMCI. It's going to go 100, 105, 110, 120, 150, maybe 200 party time. It could. I mean, stock's at all-time highs. It's a thin flow. So stuff can happen. I don't think it's going to happen, but I'm sitting on the sidelines in this one, folks.
I'll give you that dip after you hit 108.89. You came down to 91.80. So I'm calling the potential range here in the first half hour 92 to 101. And so we'll see what happens to that. Straddle sellers are scratching their head like, I'm never selling another straddle again. Call buyers are happy. Well, put buyers, you're going to have to wait a long time for that to fill the gap. I don't know what it's going to take to fill the gap in this one. 77.71. That was the top of yesterday's range.
I wouldn't short it unless I had calls. So I'll tell you, I wouldn't short stock, because stocks making new all-time highs. I don't like shorting stocks making new all-time highs, and not when they have an AI story attached to them, and not when and CNBC is going to talk about them all day. It's going to be two stories on CNBC. It's going to be ARM Holdings, and it's going to be the one we're going to right now. AB, how'd you like that segue?
Great segue. And I mean, honestly, you said about the AI trade. I don't think this company, at least right now, really has an AI story, but it's got a lot of other stories.
It does,
and that is Walt Disney reported earnings after the close yesterday. This is one that's been out of favor for a while. Well, actually coming back for the last few months leading into the report. But anyway, the EPS came in at a $1.22 against 99-cent estimates. Sales came in at $23.5 billion, slightly missed on the sales estimate. But they talked about cost cuts, boosting profit. The company raised the outlook. Investors liked it. Started to feel a little bit of that Disney magic again. The investors did, coming in, buying the stock, traded up around 8% after the report. Like Joel mentioned, back above triple digits. This thing was trading below $100 for a while, really out of favor, and it's back. The house of mouse, baby.
Well, and that 80 support was just the support of all supports. And it got down there again at the end of October. And everybody's like, well, this is the time it's going to take it out. Well, this is Disney at 10-year lows. I will say Disney will be an AI play. Nobody thinks of it as an AI play. I think
everything will be.
Oh, yeah.
I think it's going to be a huge AI play. I think there's going to be, I've talked about this before, I think there's going to be virtual parks where you're going in from your living room. You want to go to Disney? It's going to be just sit and buy a ticket in your living room, and then they're going to take you on these rides, and you have your, Vision Pro or whatever, it's going to be like third, fourth generation of that. Have that on your screen, and you're riding the roller coasters, and you're in this, the haunted mansion, and you're going through all this stuff, and you don't even have from the comfort of your own home. I believe that is going to happen. I believe Disney is going to be an AI story. It's early for that yet, though. So right now, Disney still somewhat hated. Let's see. It's very important that it holds the gains today because it has been so hated.
That's
so
such
far,
a
so
big
good.
move.
I mean, it started pulling back a little bit there, and then buyers have re-emerged. So far, so good with the House of Mouse. I think long term, you're fine in Disney. Short term, I think I'm waiting for a pullback.
Holy mackerel. I mean, you talk about just coming out with all the good news. Taylor Swift's Era Tour concert film to stream exclusively on Disney Plus starting March 15th for you Taylor Swift fans. Disney invests 1.5 billion in Fortnite owner Epic Games, biggest ever gaming entry. So I will play Drake on Fortnite on Disney. Nick Saban joins ESPN and will contribute to NFL draft coverage. So, I mean, sometimes you talk about a kitchen sink report. I mean, they filled up the bathtub with this one. This is a huge move for Disney, up $8.34, not too much off the pre-market high. Pre-market high comes in at 107.90. What do we got on the monthlies? On the monthlies, folks, you got a roadblock. If I give you a target above this, if you're looking for more, 3 monthly highs. Let's just call it 103. If you're not, oh wait, no, it's past 103. That's going to be support now. There were 2 monthly highs right at 107.5 and 108. So you are at some minor monthly resistance. If you're buying this off the hop, you want to see a bid. Also, Dennis, I mean, it's traded a lot of stock, but look how many levels they have to. I mean, how much size do you think there was at 100? It stalled
Yeah,
at
they're going to be
100.
cutting through some of
Yeah,
that. And sometimes that can hold down the open and get you in on a better price, but it's going to trade a lot of stock. So, I mean, if there's 100,000 shares, and I don't know if there is, the book isn't open here right now and we
right.
can't see it. But, I do think, and what we're talking about is on the New York Stock Exchange, we're talking about orders that aren't marked for pre-market trading. So those orders become active at 9:30, and sometimes those sitting orders can hold the price down. I think there'll be some of that, but I think it's going to trade so much volume, it's going to blow through that.
And so I do want to mention real quick on the Disney. So the Epic Games investment, I was looking at the different stakes in Epic Games. So Tencent still owns 40% of Epic Games. The Epic Games company is valued at like $30 billion. Sony actually has a stake in Epic Games as well. I think this is a smart move for Disney because Fortnite and all the different games that Epic Games has stayed in power. Like I thought Fortnite was kind of a fad. It got huge, 5-6 years ago, and then I didn't hear about it much. All of a sudden, in the past like 6 months or so, Fortnite is back. Everyone's playing Fortnite. It's not just little kids. People in our office, people are like, "Oh, you want to hop on Fortnite tonight and play and stuff." So I think Disney will have ways to collaborate with the game, and that might be adding Disney characters in the game so you can play as Mickey Mouse in Fortnite or whatever it is. So it'll be interesting to see what Disney does there. The other thing that we didn't get a chance to talk about yesterday is this new streaming deal that was announced with Disney, Warner Bros., and Fox. That is basically putting a live sports package in one thing that you can get through either Hulu, HBO, or Disney Plus / ESPN Plus. So I mean, it feels like we're kind of coming full circle on this whole streaming cord cutting cable thing, where now you can get all the sports things in one package again, and at least I'm happy about it because on like March Madness or on a college football Saturday, I don't got to flip through 5 different apps now and go from ESPN Plus to Fox Sports app.
Yeah.
And so I think this will be good for the consumer. I don't think the sports streaming thing is great for Disney necessarily.
And again, that's maybe why Disney was down initially on it. And, we're forgetting all that now. But look at, the other stocks off that deal, which we didn't talk about yesterday. Warner Brothers was trading up significantly on it. Fox was trading up significantly on it. You see Fox? Look at the candle in Fox. It opened up and they just hammered it. You know what it is? It's like the traditional, though, media companies here are just in trouble. The cord cutting, and you wonder, like, and I've talked about this with AT&T and Verizon forever, but, the sneaky trade is to sell those things too, because I just don't think their businesses, they can all go to streaming, and they obviously have the cell phone businesses, which have held them up. But those traditional TV businesses, man, the cord cutting isn't just, coming. The cord cutting has been going on. The cord cutting is fierce.
I just want to
I feel like
mention.
cutting the cord.
Yeah, I you know what? I'm one of my old fogey. I just stick with my Comcast.
Well, you know what the
They got
problem is
everything there.
cable is delayed too. So, I mean, with the cord cutting, like the streaming is delayed. So what ticks me off is when I stream my hockey game and then my phone goes off. What a goal. And I'm like, what are you talking about? Like there's no goal. And then 10 seconds later, I'm like, oh, there's the goal. Because if you're on cable, you're like 30 seconds ahead of streaming. It's not 3 seconds, it's like 30 seconds. It can be as much as a minute. So, I mean, it is significantly behind. So when I'm watching a sporting event, I actually turn my phone off because I know my friends who are all on traditional cable are going to be texting me when the other team scores because they like to make fun of me. So I'm like, as soon as my phone goes off, I'm like, oh my gosh, I'm getting scored on. So that's the bad thing about streaming sports is it is delayed.
Just one quick note. I just wanted to go into just real quick detail about the order book. That's what happened to Ford yesterday. Ford opened up right near $13. All the high freaks, probably a lot of stock to lean on at 13. So they got out there at 12.97,
Yeah.
12.98. They sold all the way off to 12.20. You were probably looking for a gap fill, and then it came roaring all the way back. Now Disney is not Ford, but it's just the importance of, if you're shorter term trader, looking at the order book, looking at the size. So, I mean, I think it's that, the initial open for Disney, where are we at here? We're trading at 10. I wouldn't be surprised if this opens like 107. It has to get a nice, a nice round number. Will it where it closes? What's important. But S&P's leaking here a little bit, down 950. Coming up on the jobless claims at 8:30.
Yep, we'll get those numbers in 7 minutes on the initial jobless claims. All right, so we talked about the great in ARM. We talked about the good in Disney. Let's get to the bad. Let's PayPal. Ticker PYPL reported earnings after the close yesterday, and despite a double beat, EPS beat estimates, sales beat estimates, the stock, I think it initially popped for like a second on the report and then just came straight down because the company offered some weak guidance. Active accounts down 2% year over year. Again, but that soft guidance is going to be what's hitting the stock. The market cares more about what you're going to be doing in the next 3 quarters and what you did in the previous quarter. And this stock has just been so out of favor. Anyone trying to bottom fish here just got, hammered on this. And I may have been in that boat.
Okay. So Alibaba is the most hated stock in the entire stock market, I believe. One of the most hated. PayPal has got to almost be second. They absolutely hate this stock. I mean, this stock was a darling 2 years ago, getting up to all-time highs. Joel, look at this, $310 a share. And now it's $58. You think about how many tech stocks, some came down from 2021, but so many, have come back. This just has not come back. And everybody keeps calling for the comeback story in Alibaba and the comeback story in PayPal. And to the point that I've been making on this show for a while, it's hard to break those downtrends. There is so many people who are just annihilated. People who have bought this stock in the last 5, 6, 7 years, all down money. They bought at 70. If it comes back to 70, I'll sell. Please give me my money back. Comes back to 80, I'll sell. Please give me my money back. Overhead supply. There's so much of it here. Alibaba's the same story. Gets a little pop for like a few minutes on the earnings, and the earnings are fine. And then the sellers just reemerge because the stock is hated and has way too much overhead supply. It's the biggest issue with buying stocks in long-term downtrends. The bag holders are everywhere.
This thing popped over the high of the move. $68 was the former high of the move. 68.21. This thing got over 69, got to 69.63, and then they just took it out to the woodshed. You got a number down here at a daily low at 56.47. Have you got there yet? Boom. Oh, very close. 56.75. So there's some halfway decent support. But I agree with Richard here, and this is not investment advice, but like I hate PayPal. I'm like, I think I'm banned from it. I had an account once.
Stop. Why do you think you're banned from it?
I don't, because I tried to
You probably just forgot your password, Joel.
no,
Yeah,
no, but it says it gives you the option not to use your PayPal account. And I'm like, okay, I don't want to use my PayPal account. And I say I'm gonna use my credit card. And then I click and click and click, and they're like, oh, well, put in your PayPal password. And I'm like, well, I don't want to. I just want to use my
Doesn't
credit
know it.
card. But I don't know. We'll see. Hey, Dennis, quick question here from Mike France. He's our
Yeah, sure.
election trader. He wanted to know if part of the PayPal might have been any of the ETF effect because the other stocks that are moving. Any chance
No, it's too
PayPal is
small.
down because of
No,
ETF?
it's too small.
Too
And
small?
there wasn't a lot. There's not a lot of ETF effects when the mega caps aren't reporting. The ETF effects are really pronounced when you have a mega cap
Okay.
reported. So on a day, Disney's big, but it's not major in the indices. I mean, what is Disney of the S&P? 1.5% maybe? Is it even that, Joel? You can look it up
I mean,
quickly. I can
you
look
know
it
what?
up
Let me
quickly
look.
here.
I'll
look it
look.
up quickly. Like it was probably the most major company reporting yesterday. That has the biggest and of the S&P, oh my gosh, Joel, it's only 0.43% now. It's that small in the S&P. Disney. So it's just so there really wasn't a lot of stocks that were going to have a lot of ETF effects yesterday. ETF effects are really pronounced when the mega caps are reporting.
I mean, so I have a couple thoughts on PayPal. I think long term, if this stock keeps getting beat, I think there is value there because the company owns and operates Venmo. Everyone that I know my age, when we're out paying each other for, oh, you picked up this tab for dinner, it's all Venmo me this, Venmo me that. It's the number one way that I send and receive money when I need to with friends and whatnot. And if that's the case for most young people, then I don't understand, at least over time, how that doesn't have some value. And to
competition, AB.
I know there is a lot of competition. You have Cash App, you have, but now, and I actually did use like PayPal, not even Venmo, for the first time in a long time the other night because I was laying in bed and trying to subscribe to HBO Max, and it was like $15.99. I didn't want to get up and get my credit card, so it gave me a PayPal button, and I clicked it. And I happened to be already logged in and had a credit card linked up to PayPal, so it actually was super easy. But that was my like one PayPal purchase that I've used in the last like 2 years. So either way, I still use Venmo. A lot of people use Venmo. Eventually, there might be some value here, but right now, clearly the market's saying not yet.
All right, jobless claims coming up here, Dennis.
Go wide. Want me to go wide? Wide.
Yeah, go wide.
You think it's going to move us?
No, but
well,
I went wide just in case.
Then you got to put all your orders back in.
I just yelling at you again.
Yeah, we have been chopping around here. The important number on the upside really is that all-time closing high made yesterday at 15.25. You got through that just a smidge, going to 16.25. Can't give you great support, but I'll tell you right now how the bulls would make a stand today is if we made a low, if we, the low was above 5,000. I know they're talking about the cash. The cash is still $5 away. But let's see if we can hold 5K psychologically. What do we got?
Jobless claims come in at 218,000 versus a 221,000 estimate. So 3,000 initial jobless claims lighter than expected. Continuing jobless claims came in at 1.87 million versus 1.878 million. So slightly light, but nothing, pretty much in line with estimates. And this isn't the labor, this isn't the jobs numbers that the market cares much more about what we had last Friday, the non-farm payroll number. And so, we'll see if this ends up moving the markets, but either way, as long as we have the data that's showing us that the economy is still strong, it seems like we've got a good macro scenario right now where the economic data is good. And even the hawkish Fed members are still basically saying the rate cuts are eventually coming, right? No one's talking about raising rates. No one's saying we're going to be here for forever. It's just a matter of when are these cuts coming. So when you've got strong economic data and cuts on the horizon, that's a pretty good environment for stocks and probably helps explain why the market's at all-time highs.
So, uncomfortable silence.
Yeah, well, Joel,
I was
Take
getting
it
a
back
drink
to
of
PayPal
water.
for a
I mean, you
second.
guys never stop talking, and then I get a drink of water, and then I mean, between the two of you, I mean, I could take the day off, and no, but
I was going to go
anyways,
PayPal again. I want because we didn't close PayPal up, and not talking so much about PayPal, but the peer plays. And it was funny last night. Square gets hit. It's the first one you think about. Affirm gets hammered on the PayPal numbers after PayPal went. It had the initial pop on the algos that are reading the initial numbers and the guidance, and then they hammer it. And when they hammered PayPal down from and where did PayPal get? Just bring it back up here 1 second, Joel.
oh,
I know you're trying to make
PayPal
sure.
got down in 50.
No, how high did it get? It spiked on the
Over
number.
69, 63.
That's show these algos, these news algos just are sometimes the dumbest traders out there. I mean, we could talk about how dumb retail is. Retail isn't that dumb, folks. If people who listen to our show are pretty smart. What is dumb is some of these news algos, just ripping. Oh, we got a beat and a beat. News algo, buy to 69 on PayPal. Are you kidding me right now? That's just pissing money away. Anyways, right back down. That news algo just burning cash. And, then it comes down. So when it tanked, it's funny. They tanked Affirm too. Bring up the after hours chart of Affirm. They just tanked Affirm. And I'm like, Affirm is not PayPal. Yeah, sure. Payments business. Okay. I can see the similarities here. But Affirm's one, going to report tonight. Two, it's kind of a little storied stock here. It's been doing a little bit better. It's been coming back. So somewhat predictable that they would buy the dip in Affirm, and they bought it back quickly. And it's funny, here it is, Affirm trading 2% higher now, despite not, reporting yet, and PayPal being down as much as it is. So you can see the complete disconnect afterwards, but the algos just hammer it. Again, dumb algos. Oh, Affirm's a peer, hammer that down. They got punished for that too. So just saying, the algos, a lot of them aren't as smart as you think they are.
And Square's holding in there. They've kind of decoupled itself a little bit. Square is actually trading in the green here by 18 cents. So good support at 65. Looks like you've had very similar range day over the last 4 sessions. Finding bids here just above 65 and finding sellers. Let's call it 68.5. This has been range bound in this area for 1, 2, 3, 4, 5 sessions. Let's see if it finally breaks out of this consolidation period. No one's whooping on it a little bit. I mean, this is probably when the PayPal news came out, but they bought this one right back up too.
A fun fact about Square?
Give it to us.
The founder, Jim McKelvey, went to my high school in St. Louis. Not at the same time. He was a few years older, but he came and talked when I was a sophomore in high school to us. It was cool. He's like, I was 15, 16. I was like, oh, here comes this tech billionaire from, Silicon Valley. And he actually had some good advice. It was interesting.
Wasn't Dorsey that founded it?
Well, him and Dorsey also grew up in St. Louis, but went to a different high school, and they were co-founders. But I think McKelvey was more, I don't know. I think McKelvey was more like Square, and then Dorsey was more Twitter at the time.
Yeah.
Real quick before we get to Christian Fromhertz, I saw a question in the chat from Jesse Kaler. Kaler, also from the Midwest up in Ohio, asking about AI farming, future agricultural plays. So I think, and I just wanted to mention this, my thoughts on this is whether you're looking at, AI plays in farming or any industry, they're all going to AI plays they're all going to start adopting AI. And I think I'd always assume that the biggest players in the space. So John Deere right now is working on, okay, how can we get AI in all of our tractors and equipment and all this stuff? But you're going to have different kind of pick and shovel plays. So if there's a smaller company that's working on the software for AI for farming equipment, then maybe you can explore those. But I think the biggest players in every single industry are going to be working on how to implement AI. So, it's not that exciting or sexy, but I think the biggest names in whatever space are probably going to end up being the ones that are leading in AI in that space.
I've got some thoughts here. Let's bring Christian in to continue this conversation because he's in the background here. So bring Christian Fromhertz here in, and then I want to continue this conversation.
Christian Fromhertz, founder, CEO of Tribeca Trade Group, one of our quality guests on PreMarket Prep, and one of our quality listeners too. Every time I talk to Christian, he's like, "Hey, Dennis said this, or you said this, or hey, AB's getting a lot better." I mean, always coming up with good comments. Christian, how you doing today?
Good morning. Coming from downtown New York. Oh, sorry, that's your. I always hear the coming from Detroit in the morning. So
Nice.
no, I'm doing really well. This market has I think has everybody on their toes, and it's got something for everybody. And yeah, the AI plays. That's a great question. And I think you kind of have to go back to go back to the companies that are doing making the AI rather than the
Mhm.
possible like a deer or a caterpillar. But yeah, I mean, go back to the technology players, and I think that's why all these companies are doing so well right now, is that there's a lot of opportunities.
I mean, self-driving, and obviously that's not exactly AI, but let's think about this for a second. It's got to be a hell of a lot easier to create a self-driving tractor that's going to be on farmland than it is a car. Because if, something, goes wrong, you're going like 2 miles an hour if you're combining a field. I mean, so it actually is an interesting question. Could self-driving tractors, be before self-driving cars? Like maybe, again, the market isn't there, so that the people aren't working on it because it's not a big enough market, maybe. But it's got to be a lot simpler to do in a tractor because you're not flying on the roads and taking corners. You're plowing a field. I mean,
Uh,
or working there. It seems like it should be simpler.
And I would think they already have some automation too, and that also goes to like robotic stocks as well. But yeah, it's, very interesting, and yeah, you would think it would be a lot easier. I agree with you.
Let's go to ARM and get your thoughts here, Christian, because it's the stock of the day. It's up 28% here. We were calling it maybe the most obvious trade in hindsight, and not a lot of people had it. Anybody who's short it was asking for trouble here. I mean, is this just it's up 28%? Is this just this market hungry for anything AI?
Yeah, and I do have a position in ARM. I've had a position
Oh,
in
nice.
ARM since going back to the end of last year. Once it started to kind of make its, I think this was back in the beginning of December when it started to kind of make its move. It's kind of funny because it lulled you to sleep a little bit. We've actually seen a quite a bit of option activity, which kind of gave a little bit of a hint that they just kept on increasing, like leaps calls in ARM. And but it wasn't really performing the same way as the SMCI and of course the Nvidia. So it kind of just lulled you to sleep a little bit the last
Yeah,
month. And I almost took my position off because I am more of a momentum trader, and when things kind of go sideways for a bit, which
yeah,
it did. I think right at the end of the year was kind of and it did make a chance at taking out the highs in January, but really didn't do it. But I was getting excited and I was tweeting about, and I was wrong. I was like, I think new highs are coming for ARM in January, and I'm like, geez, don't put that stuff on Twitter again, because it's tough trying to call a breakout, and then when
yeah,
it doesn't happen, so I'm like, okay, I'm going to sit with the position. I did take a little bit off yesterday just for risk
yeah.
management purposes. So I know, like, hindsight 2020, I agree with you. It looks obvious, right? But and I trimmed a little bit here this morning at 99, and then I'll just kind of sit with the balance. I don't see like a ton of price target raises. That's probably something that where Aaron, you might have more information, but I would like to see those brokers kind of
Okay.
stumble all over each other like they've been doing, and
I don't
like
think there's a lot of coverage here, though, Christian, too. Like, it's not like Nvidia with so many analysts covering it. You might be able to hunt that down in the background, but I don't think there's a ton of coverage here. So same thing with SMCI. There just wasn't a lot of coverage here.
yeah.
Obviously it's stock that's talked about. Maybe we should talk SMCI here too, Christian. I know you were playing this one as well. Are you still participating in this thing, or is this thing just gone crazy mode here?
I same thing. So I manage two portfolios. I manage one for longer term where I don't look at it and touch the positions. As long as they're
Yeah,
following the trend, I stay in them. I've got SMCI in that portfolio. I've got ARM in that portfolio. I've got Nvidia in that portfolio.
that's a nice portfolio.
Um, you know,
Wow.
and, and they're small positions. Here's the thing: they're not 20% of my of that portfolio. I actually have close to 50 names in that portfolio.
Yeah.
it makes it easier for me to kind of ride the trend and stay in those names when I have the understanding that it's a portion of the portfolio, kind of like an ETF. And this way I can just be a little bit more relaxed. In my trading account, it's a little bit tougher because I want to, it's really difficult to hold these names after the moves that they've made, because you just want to touch the, you want
Yeah.
to touch the positions and do something, because this is very unusual given the overall, especially the overall breadth of what we're seeing in the market. But you've got these leaders that are just continuing to kind of grind higher every day. So the hardest thing to do in these positions is to not touch them for now.
That's the same thing, and I run the same way. I have my long-term investing portfolio, which I put the NASA, and I've talked about those, the Nvidia,
Oh,
the
I
AMD,
love
and the
that
SMCI.
acronym.
And I wish the A was ARM, but it's not. It's Amgen, and Amgen got killed yesterday. So I put those in. But if I had those sitting in front of my trading account, like if SMCI was sitting in my active trading account, I'm like, can click out of it in 1 second, I'd have been long gone long ago. So I mean, it's like you've got to like hide it and look at it so you don't trade out of it. And I mean, as traders, it's easy when you're a long-term investor and you log in your portfolio once a day at night. But when you're an active trader and you're doing active trades all the time, that's what I find the hardest thing to
Yeah.
hold on. Like I get into so many good positions and I exit so early. I've done okay on this SMCI one, but obviously, I'm still, in the position here. So, maybe it's going to go south, who knows? But I mean, how do you manage that? How do you like take the psychology of, trading and investing and separate it?
Well, it's funny. I was just going to say that, everybody's different. Everybody's a different trader and has different preferences about what they feel comfortable with in terms of risk. We're all different. For me, what helps me is just, dialing down the position size. I personally, I can't hold a really large position in some of this because I am in front of the screens all day long. Like I said, I've got the one portfolio where I kind of keep to the side. Otherwise, I just dial down the position size so that I'm comfortable with it. And I've just learned that over years of trading, that the bigger I get in a position, the more like I shake myself out,
Yeah.
psychology wise. So you have to kind of come to grips with what you're comfortable with. And for me, it just, it is just regulating the position size so that I'm not staring at every tick.
Well, Christian, let's I want to transition a little bit into a different sector that you mentioned, and that's travel. We don't talk about travel a lot on this show, but it looks like, travel numbers are finally getting back to pre-COVID levels. What are your plays there? Maybe like a Bookings, a TripAdvisor, a Travelers? I'm just kidding on the Travelers.
Yeah, well, so, what's interesting to me is just this overall market and the market dynamics. And I'm referring to a lot of what we're seeing right now in terms of the haves and the have-nots. There's certain sectors, obviously, we know about the small caps. We know that they're more vulnerable right now to interest rates. But there's also, when you look at the different levels of the consumer, or, the individual person. And for example, look at what AXP is doing, right? This is American Express. Now, again, this is not my play right now in the market, but it's just kind of a barometer of what's going on, right? Who uses American Express, right? Well, I think more wealthier, affluent individuals are using this, right? They're booking travel, they're getting bonus miles, right? And I think that kind of goes into the category, the wealthy right now goes into the category, of course, the haves, right? And noticing some of these trends that are going on in travel, right, where they're spending, right, and they're getting rewarded because of what interest rates are doing, right. They're probably collecting a lot of interest, on T-bills and that type of thing, and they're being rewarded and they're going out and they're traveling. So I think a couple names that are going to be reporting that I'm watching are Expedia, which I think is after the close today. Now, again, that's more of like a discount travel company. I don't think it's going to do has the same type of theme as your American Express, but I'm definitely watching that one. I'm also watching Booking.com, which is also breaking out. I know that I really want a stock split in that one because that's a tough name to trade. But yeah, I mean, if you look at that Expedia chart, can I share can I go through a couple charts?
To present, and then you can do it by window or by tab is probably the easiest.
Okay, gotcha.
What about, do you look at any of the like Vegas stocks? I mean, Wynn reported.
Yeah, they're they're a little bit trickier because you've got that component of China.
Yeah.
Macau. Yep.
Yeah, let me get the present.
Caesars maybe a better, like, if you want more Vegas style. I think I don't think Caesars does. I don't know if they have any China exposure, but you think about Wynn and even Las Vegas Sands. I mean, it sounds like Las Vegas, but you're getting a lot of China in there.
Yeah, so I don't know if that worked. Let's see.
Yep, got it. Pulling it up right now.
Okay, so this is another one that I like. Airbnb. Right. So Airbnb had this nice break higher about a week ago. Look at the volume on that move. And then it's just been kind of settling back down here. And it just kind of came into the so I begin to kind of like put these names on my radar, put an alert on the name, and then just kind of wait for the turn. And got the turn yesterday. And so this is kind of right in the wheelhouse of that theme right now. And notice like on my indicator, it stops right at where it needed to, top of value. You get a couple of these little hammer bars and starting to turn back up. So this is probably, I might have a specific earnings trade on, like using options, like using a call spread for Expedia just to participate. But I'm probably going to stay in Airbnb for throughout the through that, and we'll see what happens. But yeah, again, what I like here is my indicator here gives me a sense of like where the trade's going to work and where it's not. As long as it stays above this 143 level, I'm renting some Airbnb.
All right, Christian, since you have your charts up there, you've been working on a new indicator. You've been working on it with Web Goalie, and it's going to be, I think it's already premiering on TradingView right now. Tell our listening audience, I know they like your methods of technical analysis. Why don't you share with them what's now available?
Yeah, so so Webbegoal has just been amazing. He's an amazing programmer, and we've been working together for a while. And we've rolled out what's called the market webs, which uses a concept called volume at price, and I refer to it as a roadmap. Right? I mean, I have a lot of ideas on a day-to-day basis, some of which are going to be right, some of which are going to be wrong. But I like to have like basically a blueprint to say, hey, this idea is working, just like the Airbnb, and then I know where my idea is not going to work. So we use this concept of volume at price, right? And we incorporate that on multiple time frames. So for example, like I'm also watching, what I think is the risk in this market, and watching TLT. I know that's Dennis is something that you've talked about before, right? And I am getting, it's making me squirm a little bit because, it's very close to my support on both the daily chart, and I've also incorporating what's known as the value area for the weekly chart. And I want to really see this stay above, $92. If we start to really break that, then I get squeamish about this market and think that, hey, we might start to see, a turn the other way. So again, it's giving me a really good set of parameters to kind of, make some decisions about positions to hold and, overall risk management. So yeah, market webs. So we have a website, and we've moved this over to TradingView, so that now people can kind of take a look. And we wanted to kind of share this with you guys for free trial for 30 days for a month, and you get to kind of test it out and see how it works, and use it on multiple time frames, and that's the beauty of it. Depending on what type of a trader you are, you can use it on the 1 hour chart or the 5 minute chart, or the weekly chart. So thank you guys for letting me debut it with you guys, and I'd love to hear feedback from you guys.
Yeah, I'm going to go ahead and throw that link in the chat. So if you guys want to go check it out again at marketwebs.com. Christian, going back to stocks real quick, another company that reported this week, Palantir.
Yes.
Are you in this stock? I mean, we had the big pop after the earnings, and then a continued follow through yesterday. How, do you think this thing's going to keep running? People start taking some profits maybe?
Well, this is a triple D name from last year. This was an AI play. Speaking of Mr. AI, I'm joking, of course, but no, I remember you really kind of pounded the table about, hey, this could be an AI type play. So now it has turned into a bit of you put it now into the momentum category. And what really shocked me yesterday, or I guess was 2 days ago, was the volume that happened. I mean, it's amazing. I think it was the biggest volume, 1-day volume. And again, it's just following the
It's
pattern
crazy
of what
volume.
we're seeing in the SMCI and so forth. So,
Mhm.
now it becomes, so I was looking at it on, what's today, Thursday. I was looking at it on Tuesday at the close, and I'm like, I kind of want to buy this thing because I don't think that the move is done. And I didn't do it. Just because I'm thinking a lot about risk and so forth. And I said, it'll be there tomorrow. And I also like what it did on a technical basis. Like, it did jump over this, I thought it would stop possibly at the top of value on the day of earnings. It didn't, right? So it broke through. And I said, I caught it yesterday, and I took some targets in it yesterday, and I'm ultimately looking for that next leg up to 24.66, and then we'll kind of see what it does there. But I'll probably be a seller of a good portion of my position. But just another big momentum play. Amazing.
It's important to talk about volume too on these moves because that on the earnings day, 421 million shares traded. Now it backed off a little bit yesterday, but you had the big volume going, with the up day. Now yesterday it dropped to 250. So if you're keeping an eye on this thing, you found the buyers on the earnings day. You found them, again yesterday. There's going to be a point where you're not going to be able to sell in the straight. Now, right now, it's trading up 18 cents, but I'd wait. I mean, because the normal volume on this thing is really like around 30, 40 million, 50 million. So if the volume really starts to taper a little bit, you get a little bit of consolidation, a couple lows in the same area. Maybe you find a place to put your sell stop. But
The-
good
What,
point
what,
on the volume there.
one more point before we go away from, the SMCI, the Palantir, the AI play here. I want to ask Christian, because
Mhm.
it doesn't feel like upside capitulation here to me. It doesn't feel like this is the blow off top
Yeah.
on all these stocks, because everybody keeps trying to call a top in Nvidia. And
Yeah.
and they're wrong, and they're wrong, and they're wrong again, and they're wrong yesterday. And like
Yeah.
my Twitter feed, when Nvidia fell off like the 30 points it did the other day, my Twitter feed was just littered. And people know I own it too, so they really give me more heat than normal. They're like, "You missed it, Denny. You missed it. It's going back to 300." I mean, do you feel like we've had upside capitulation in these names? Do you feel like we've had the blow off top? I feel like it's just been like the steady climb. It's not like this day that they're up, boom, Nvidia's up 20%. Everybody's like, what's going on? I feel like we haven't had that.
I thought the top was supposed to be 666 according to.
Yeah, I know that's 666. They have it 666 and 6. That would have been a cool story. I
It
mean, that
would
would have
have.
been a cool story, but yeah.
I mean, I think what you're seeing as well is, like, these names are, a couple of these names are going to be reporting earnings. What I find fascinating is, like, just the other day, I saw some people, like, doing victory laps when the stock was down, like, 2%. Then the next thing you look, and the stock's only down 1%. And so there, for whatever reason, there's still buyers in this thing. And even though it had a pretty ugly, looking candle, I always say, like, monitor that 5-period moving average when something is trending like this. So, I mean, do I think it's close to, getting, you know, definitely ahead of itself. I do, and I think maybe earnings might be, might have something to say about that. But
But,
for now, I would, make sure that you've got to stop in names, and, pay
well,
attention to what happens when there's a rotation, or, days where, Nvidia and AI is a little bit out of favor. And watch to see if it comes back up again, because that's what I'm noticing is on the little bit of down days that you're seeing in Nvidia, it's not going down for long.
Gonna keep you on for one more minute
Yeah.
here, and one more. The $1,000,000 question here is, and you said you own Nvidia and SMCI and ARM in your long-term portfolio. What makes you ring the register? At what point in time do you sell these stocks? Because I mean, obviously stories can come back out of favor, and you don't want to let a big winner turn into a loser. What do you do to
Mhm.
control the risk of giving back a lot of your profit?
Yeah, I mean, so I'll do the logical thing, risk management thing, and I'll trim a little bit more into earnings, because that's an event, right? And it's an unknown
Yeah.
event. We don't know what we're going to see there. But, there's certainly certain things that you could do. You could buy a put spread. You could, in this way, it's a spread, so it's less money that you're putting up front to give yourself a little bit of a hedge. But, it's so you have to be cognizant of those events. But other than that, it's just, once it drops below that 5-period moving average, will be a sign for me that the momentum is changing. Because look at the momentum above the 5-period moving average. It's been above here now since the beginning of January. So once it loses that momentum, then you might see me check out a little bit more. Now, I don't really want to get out of the position altogether, but I think from a momentum standpoint and a short-term standpoint, that would be my clue to do that, and then to kind of look to re-add. I mean, that's the whole thing, is you want to stay flexible and you want to stay
Yeah.
nimble, so that if you do get a dip, what do you think is going to happen with a dip? Do you think it's just going to crater, or do you think it's going to get bought again? And I think if you're and as long as nothing changes, and as long as they don't change their guidance or anything like that in their earnings, then I think dips will continue to get bought.
And it's the other thing too that Tim Seymour said on CNBC the other day. Just imagine being a money manager that is sitting on the sidelines, and there's so many of them sitting on the sidelines of this AI story saying, well, it was a bubble. The bubble is going to burst at 400, at 500, at 600, at 700. And, all of a sudden, there's every money manager that's like, I got to get in this thing at some point. You get that dip, they jump in. I mean, even to me, the reason I bought this thing at 400 was because I watched it go from 150 to 500, and I'm like, well, yeah, it seems like a bubble, but then you start doing the math, and you're like, well, it's growing into this valuation here. So, I was buying the dip at 400 here. So, I was a little bit earlier than everybody else, but there's so much, like, as much as I was saying, with other stocks, like, they're in death, like PayPal's and Baba's that just can't find their way. There's so much overhead supply. There's so much underneath demand in something like this. Like, that takes time to break that too.
And just going back to Palantir for just a second, I mean, that volume, do you think that's, that's interest from those institutions that are not in it, right? And, they came up with a story, because I was listening to you guys saying, hey, nobody really knows what Palantir does. But, they were saying that they're beginning to advise companies, and it kind of goes back to that tractor example. All these companies are going to need advice in terms of, like, how do you execute an AI, type strategy. And, so that kind of, I think, came through in the earnings call for Palantir. And, I think that's why you're seeing that type of a volume, because institutions are not exposed in that, or don't have enough exposure in that type of company.
All right, we've been on the line with Christian Fromhertz. He's the founder of Tribeca Trade Group, giving us his fundamental and technical analysis of the markets, and it's pretty darn good. Christian, we'll be dialing you up again real soon.
Thanks so much. I could talk markets with you guys for a long time. It's always a pleasure.
We're going to be getting you on more, Christian. The audience enjoys it, and we learn a lot too. I really appreciate it.
Thank you, Christian.
Thanks, guys.
All right, S&Ps, we crawled our way back. We're mid-range on the session here, just hanging out at 5,010. I will say something about Nvidia. I'm not trying to call top, and I'm not going to send you any. I'm not trying to send you any hate tweet, because I did recommend you. I said, oh, you should sell a long time ago. But look what it did at this 500 level. And then it's the only reason I'm looking at this 500, boom, pull back, 500, pull back again. Then it hit 500 again, and the pullback was shallow. You know what happened? It didn't even blink at 600, right? So I'm just wondering if if like some of the bigger players are like, okay, I was going to sell this at 600, but I waited a couple days, and now it's at 700, way above my target. 701.76 is the all-time closing high. You got a smidgen above that yesterday at 702.20. So I would just keep an eye on the $700 level, and, you're getting another consolidation period. Of course, you could always establish a strong bid at 700 and go to 710, 720, 750. But it is, and I can hardly cause it a pause, but that's what it did at 500. So anyone that's looking technically, maybe thinking about selling your Nvidia, Dennis is not included. Keep an eye on that all-time closing high.
And I tweeted out yesterday, so you guys all spooked me enough that I did sell the piece that I bought at 620 6 days ago. So I bought more, bought 3 times. I bought at 400, my core position. Then I bought more at 518 on the breakout. And then we had this little mini breakout at like 620. You see, I had
right
5 days. consolidation. And I bought more, and I tweeted out that day. I sold a bunch of my IWM and bought more Nvidia with the proceeds. I'm like, you know what? Maybe I'm just getting too big in this Nvidia, and it's growing as well. So the position that I bought, the shares that I bought at 620 5 days ago, not joking, or 6 days ago, I think it was, like 6 trading days ago, I sold that yesterday for over a 10% gain. So I mean, that was, maybe going to be a shorter position here, but I still have the core position, the original buy from 405. I haven't sold any of those shares.
And now all those people are going to be like, Dennis, how could you sell your Nvidia? Why did you sell it? 800.
And again, I have the majority of the position, so I just sold that extra stock that I bought at 620, which was kind of a gutsy buy. When I bought that at 620, they're like, you just bought the top. You just bought the top. Well, here I am 6 days later, I made 10% on that. And the IWM, that was when I was nervous. I'm still nervous about the IWM. I sold at 198. That's down to 193. So that ended up working out pretty well here.
One thing I found interesting about this Nvidia run, I'm going to pull up my screen real quick. Wall Street Bets, which to their credit, a lot of people on Wall Street Bets have been very self-aware that, hey, we're terrible traders, we're really dumb, all this stuff. They've been trying to call a top on Nvidia. I'll pull up this one. It says, Nvidia made only $4 billion in 2023 and currently has a 1.7 trillion market cap. For comparison, Microsoft, blah, blah, blah. It's got 2,500 likes. All these people in the comments are saying they're buying puts on Nvidia, whatever. And first of all, these numbers are just not true. The Nvidia made like 9.5 billion in net income, not even revenue, last quarter, let alone last year.
They're just making numbers up.
No, they're just making numbers up. But it's funny because now you have a stock that's on this moonshot that's actually justified by fundamentals. And instead, the Wall Street Bets crowd is saying, let's short it. And it's like, this is your guys' chance. All you have to do is buy and you're going to make money. And then instead, they're trying to short it. So no matter whether they're trying to get on a rocket ship like, GME or AMC, and they're going to end up losing money on that, or trying to short this one. And it's just, to me, I'm like, why'd you guys stray away from, buy and hold and diamond hands and all this? Because you guys would have been made a killing on this if you guys had stuck with that strategy.
So, multiple thoughts here. Again, on the sidelines, a lot of people are very jealous. A lot of people on, social media platforms are so pissed off that they've missed this move that they want the stock. They need the stock so that I can feel better about myself. I need Nvidia to crash. There are so many people that absolutely hate this stock, and it is jealousy. Now, again, it's, we look at here, and there is a fundamental story to your point. And what I've said before is, people are saying it's 100 times earnings. It doesn't make any sense. I said this 2 days ago on the show. If you're giving those arguments on Twitter, it means you did not do your homework. What the argument should be is that there's pull forward. I'll give the bearish argument here. This is what you should be writing if you are a bear. There's pull forward, and these, the competition is coming, the margins are going to shrink, and these earnings growth is not sustainable. That's the bearish argument. It's not valuation, folks, at this point in time. If the margins, stay where they are and the earnings continue to grow, this stock is not expensive. So if you believe the AI story is true, this stock is not 100 times earnings, folks. It's 35 times forward earnings. When we were buying it at 400, it was 25 times forward earnings. So, I mean, this company is growing earnings, and the price is simply trying to catch up. So, again, if you're a bear, stop talking about valuation, start talking about pull forward, and say the earnings growth isn't sustainable. Because if this earnings growth sustains, the stock's PE is going to get cheaper.
Yeah, I mean, it's to me, like, my point in bringing that up is it's just funny that, they had an opportunity again to kind of just buy in and hold and not really, and instead they're trying to call a top on it. It obviously hasn't worked. Maybe that'll be our sign that once Wall Street Bets flips, capitulates, and starts buying Nvidia at 850, maybe that'll be our sign that.
I mean, Wall Street Bets, love them, but, what has happened to AMC? And maybe they weren't involved in that one, but there was a lot of them that were, because I know I said something negative, 2,000 comments at me, hating me and killing me. I think it was GME, maybe it was. Where are these stocks, folks? GME, the high was $120 a share. It's $14. You're down 90% on your money. AMC, you're down 99% on your money. The all-time high on AMC now, because I did the reverse split, $726. It's $3. So, I mean, invest in good companies. at reasonable valuations. Don't get caught up in hype and story and turnaround stories and buying companies that are bankrupt, because that's a good way for you to lose your money.
I see. Before we wrap up on the day, and then sorry, Joel, whatever you were going to say.
Just one question from the chat about when we talk about Dennis going wide. Besides his arbitrage and trading that he does, he makes markets in different stocks. And so when there's news coming out or economic data, he just likes to pull his markets, because there could be wild fluctuations and not get picked off. So we use that term a lot, going wide. That just means you're a market maker and you're just saying, hey, if you want to get me, I'm out here, not here. So
yeah, you're not making a tight market where you're on the bid on the offer, because then you get picked off on the news and then the stock price is here and you're like, oh. So, I mean, market making is like picking up nickels in front of a bulldozer. So, you when you've got an 830 number coming, the bulldozer's sitting right there. So you get the hell out of the way, let the bulldozer go through, and then I'll pick up the nickels afterwards. So, I mean, that's what market making is. And, Citadel Virtue, it's all the same thing. You try to go as wide as you can, and you back off. When there's risk, there's a reason the S&P goes from 2 cents or the SPY goes from 2 cents to 50 cents. Because the market makers are like, well, I'm willing to make a market out here, but I ain't giving it to you here, because I know if the number's bad, I get picked off by the more informed algo, and, the price is here on me. So that's, a little market making, and good question.
Well, it is 9:07. Time to wrap up. One final thought that I have, and I guess, if you guys want to have comments on this before we wrap up, but I mean, I do see a lot of people, and some people in the chat, some people on Wall Street Bets, whatever it is, that are jealous or upset that they have not been in this, AI run, Nvidia, and they're like, oh my God, missed out on this once in a lifetime investing opportunity. Just in my last, 6-7 years of being an active participant in the market, there have been about 5 of these once in a lifetime investing opportunities. And so if you didn't get this one, I wouldn't beat yourself up too much, because I promise you that in 2 years, a year and a half or whenever it is, we'll be talking about a different, once in a lifetime investing opportunity. So, I had a lot of Nvidia and I sold some of it. So part of it's painful for me too. But again, I know there'll be other stuff coming down the road. So
always another trade.
It's whether it was buying, Tesla right before the big pop before COVID, or getting in on AMC and GME, or getting in on this or that, Bitcoin on the, there's always going to be these different opportunities. So, just don't beat yourself up too much.
I mean, Apple, when we just talk about those opportunities here of AI, I do believe this Vision Pro is going to be an eventual game changer. Again, I'm just not sure the bulkiness and how much is going to be widely adopted here, but this technology is real. I mean, the valuation is kind of high. It's not, 29 times earnings, but maybe this is the growth engine that it needs. It's productive. What's happened with the chart here, like I'm in Apple. I think I'm stopping myself out under the 179, 180 level that Joel, we've pointed out multiple times. But I just think, if this AI story stays hot, Vision Pro might get some love here as people are using it more for different things. And maybe this starts to get a little bit of AI love, because right now Apple's getting no AI love at all.
Apple's chart is so crazy because in 2013, right, you're talking about like 13 years after the iPod came out, the iPhone had been out for, 4 or 5 years at that point. And there are probably a lot of people like, oh, I should have invested in Apple 10 years ago or whatever. You could have bought in 2013 after all this stuff and still be up more than 1,000% now. So maybe this is something similar where it seems like, oh, this is so established, the growth isn't there. And then 10 years down the road, we're looking back and saying, we could have bought Apple at $189 a share right after they put out the Vision Pro. So who knows what's going to happen with this? But, all right, guys, 9:10. Great show today. Thank you to Christian Fromhertz from Tribeca Trade Group for joining us. Joel, who do we got coming on tomorrow?
Todd Gordon from Inside Edge Capital, who's pretty darn good on this market. He'll be joining us from Saratoga, New York, folks. So everyone have a good day.
Some horses up there.
Yeah. I'm trying to get out there for the Belmont. This is a whole nother story. The Belmont is going to be at Saratoga this year because they're redoing the track.
Let's go, Joel. Joel, I'll go with you.
Okay. All right. Road trip. All right, AB, this is it for you for the week, right?
I'll not be here tomorrow morning, or might not be on the stream next Monday or Tuesday too, but we'll be back next week. So
that's why me and Joel are producers now.
Yep, exactly. All right, guys.
And I can leave. Bye-bye.
Happy trading. Stay green. We'll see you tomorrow. Well, I won't see you tomorrow, but Joel and Dennis will be here tomorrow. Make sure to stay tuned.